I'm Charlie Munger, 99 years old, sitting in the same modest house I bought decades ago in Los Angeles. No mansion upgrades, no private jet, no fleet of supercars, just a clear mind, a stack of books, and a fortune built on one simple truth that nobody teaches anymore. The real billionaire mindset isn't about getting rich, it's about not losing what you have. You won't hear this on CNBC. You won't see it in some 25-year-old guru's Lamborghini videos on TikTok or YouTube. Because the truth is boring. And boring is what made me a billionaire. Boring compounded quietly while the exciting crowd blew up and started over. I could have been twice as rich, maybe 3 times, if I hadn't been stupid early on. But I learned the hard way. And after 50, I turned stupidity into a science of avoidance. That's the mindset. Not brilliance, not luck, not some secret formula whispered in Davos backrooms. Relentless avoidance of stupidity. Let me give you the billionaire mindset in 10 lessons I lived by every single day from age 52 until now. No fluff, no hype, just what turned $3 million into hundreds of millions and eventually billions through Berkshire while I slept like a baby, played bridge, and ate peanut brittle. We're going deep here. This is the full masterclass. Settle in with a cup of coffee. Black, no sugar. Like my investments. Let's start with the foundation. After 50, your money isn't for growing anymore. It's for surviving. Preserve capital like it's your last breath. Let's start with the harsh reality nobody wants to face. At 30, your portfolio is seed corn planted wildly. Take risks. Recover from blowups. At 50, it's oxygen. One major leak and you suffocate financially. I learned this in 1976 at age 52. I was already successful, partnered with Warren at Berkshire. Millions in the bank. But ego is a hell of a drug. A friend from my Lord days pitched a private oil drilling partnership in Oklahoma. Charlie, geologists swear there's 1 billion barrels down there. Limited downside and limited upside. 10-to-1 return in 5 years. Sounded clever. I wrote a $400,000 check, 10% of my liquid net worth. 18 months later, dry wells everywhere. The partner vanished to Costa Rica with a briefcase full of excuses. I was down $340,000. That night, alone in this very house, I grabbed a yellow legal pad and ran the numbers. Starting whole, $340,000 loss. Age 52, to break even in 20 years. Need 15% compounded annually. Without gambling further. Impossible. That mistake cost me not just the money, but the compounding on that money. At a conservative 8%. That $340,000 would be worth over $8 million today. At Berkshire's rate, north of $50 million. One stupid decision at 52 echoed for decades. From that day forward, preservation became my religion. No more clever deals. No more private placements. No more friends with hot tips. Here's the math I tattooed in my brain. Eat 30. 50% loss on $2 million portfolio leaves $1 million. 100% gain needed. About 9 years recovery at 8%. 35 years left to retirement. Age 50. 50% loss leaves $1 million. 100% gain needed. About 9 years recovery. 15 years left. Age 60. 30% loss leaves $1.4 million from $2 million. 43% gain needed. About 6 years recovery. 5 to 10 years left. At 60, a 50% loss isn't a setback. It's permanent impairment. You will be selling assets to live while the market recovers, turning paper losses into real ones. I knew a surgeon named Robert, 58, 2.1 million saved. 2021. Heard about the metaverse. Dumped 35% into crypto and NFT projects. 2022. Down 75% on that slice. Total portfolio, $1.2 million. Had to go back to the operating room at 62. Hands shaking from stress. Patients noticed. His colleague, Helen, same age, 1.9 million. Allocation, 50% dividend aristocrats, 40% short-term bonds, 10% cash. 2022, down 11%. Lived off 68,000 in dividends. Never sold. 2024, back to 2.3 million. Retired at 63. Golfing in Scotland right now. Same profession, same market. One preserved, one gambled. The billionaire mindset. Offense wins games. Defense wins lifetimes. After 50. Cap single positions at 5%. Sectors at 20%. No exceptions. I did this religiously. Never broke it. Never needed to. Your move tomorrow. List every holding over 5%. Sell down to compliance over 12 months. Tax loss harvest if needed. Preservation isn't exciting. It's liberating. One knew a widow named Margaret, 66, inherited 900,000. Advisor said long-term bonds are safe. Put 70% in 30-year treasuries at 4.2% yield. Felt secure. 2022 rates rise. Bonds cratered 28%. Needed 50,000 for a new roof. Sold at the bottom. Lost 250,000 principal. Now lives on Social Security and regret. Her sister Ruth, same inheritance. Built a bond 10 short-term treasuries. Tips, Munis. Down 3% in 2022. Income uninterrupted. Portfolio now 980,000 and growing. Preservation isn't theory, it's survival. Envy is the only sin that gives you zero pleasure and costs you everything. Envy is the dumbest of the 7 deadly sins. Why? Greed gets you the yacht. Lust gets you the thrill. Gluttony gets you the steak. Envy, you get nothing but resentment while the other guy enjoys his yacht. 1999. I'm 75. Everyone's laughing at my old economy stocks Coca-Cola. Delete. Washington Post. Meanwhile, 28-year-old .com founders are billionaires on paper. Private jets, magazine covers. Charlie's a dinosaur. 2002. .com bust. Those kids are broke, flipping burgers or suing each other. My boring stocks, up massively. I never envied them once. Envy kills portfolios faster than recessions. I know a lawyer, Tom, 55, steady 7% returns, comfortable. Then his golf buddy brags about a 200% oil stock win. Tom can't stand it. Leverages up, chases energy. 2014 oil crash, down 60%. Retired at 68 on Social Security. Buddy lost 2 but Buddy was 42. Recovered. Tom didn't. The mindset. Your portfolio doesn't care what your brother-in-law made. Delete CNBC and follow the flexers on Instagram. Measure wealth against your 80-year-old self needing nursing care, not your neighbor's Tesla. I never compared. Warren and I owned insurance, candy, furniture. Boring. While Silicon Valley partied, we compounded. Envy would have cost us billions. Case study, 2021 Cryptomania. Everyone's a genius. Charlie, you're missing out. I stuck to my circle. 2022. 90% losses for the envious chasers. My dividends, still writhing. I knew a couple, John and Susan, retired at 62 with 3.5 million. Lived on to 0.4%. Traveled modestly, helped grandkids. Died at 93 and 95 leaving 9.2 million. Neighbors bragged about 4% withdrawals. Second homes, Teslas. Envy drove spending. Ran dry at 89. Moved in with kids. Envy isn't motivation. It's sabotage. Your move. Make a no envy list. 3 people who trigger you. Mute them. Delete apps that parade wealth. Envy saved is money earned. Every December review your feeds. Cut the poison. Own businesses, not stocks. Think like an owner, not a trader. I never bought a stock. I bought businesses that send checks forever. Coca-Cola, not a beverage company. A global addiction machine. People drink 12 billion servings daily. Recessions, they drink more for comfort. Seize candy, not candy. A gift-giving tradition. Christmas, Valentine's guaranteed revenue. Insurance float, free money to invest. The mindset. Buy wonderful businesses at fair prices. Hold until hell freezes over. I held Coca-Cola from the 1970s. $1,000 invested then. Over $1 million today with dividends reinvested. I never traded it. Traders pay taxes, fees, and emotions. Owners collect. Contrast day traders. 90% lose money long term. Why? They're renting excitement. Owners own durability. Portfolio example I built for a 60-year-old client. 40% consumer staples co. PG, PEP. 30% financials AXP, insurance. 20% quality industrials. 10% cash for opportunities. Result, 8 to 10% total return. 4% dividends. Sleep proof. I knew Herald. 58 to million. Followed gurus. Traded weekly. Fees 81% yearly. Taxes on short-term gains. 2024. 1.8 million. Same period my boring portfolio. 3.2 million. He traded brilliance. I own durability. You're a move. For every holding, ask, would I buy the whole company? If no, sell. Own 8 to 12 forever businesses. That's it. Reinvest dividends until 70. Then live on them. Never sell the goose. Debt is slavery with interest. Leverage is a loaded gun pointed at your head. Debt magnifies wins and murders you in losses. Berkshire. Zero corporate debt for decades. Friends borrowed to buy real estate or stocks. 2008. Margin calls. Forced sales. Suicide rate spiked. I slept. Personal rule post 50. No debt. House paid cash. Cars cash. No margin. Ever. I knew a developer. Frank. 57. 10 million net worth. Borrowed 5 million at 4% cheap money. 2020 COVID. Rents dry up. Lenders call loans. Sold everything at bottom. Now 68. Renting an apartment. Me, no debt. Crashes are buying opportunities. I knew a couple who refinanced their paid-off home in 2021 for investments. Rates rose. Payments tripled. Foreclosure at 65. No debt means freedom. The mindset. Debt turns bad years into catastrophes. Pay off everything by 60. Live free. Your move. List audit. Pay highest interest first. Mortgage by 60. No helix. No credit card balances. Freedom isn't a big house. It's no payments. Invert everything. Don't ask how do I win. Ask how do I avoid losing. Inversion is my superpower. Don't predict booms. Avoid busts. What kills retirees? Leverage. Complexity. Envy. Speculation. Drama. Dumb people. I inverted. No leverage. Simplicity. Indifference. Quality. Calm. Smart partners. All I want to know is where I'm going to die. So I'll never go there. That's inversion. I knew thousands who predicted markets. Most wrong. I avoided stupidity. Survived. Thrived. Your move? List 10 ways to blow up. Leverage. Options. Crypto fads. Private deals. Hot tips. Envy trades. Complexity. Drama partners. Health neglect. Overspending. Eliminate 3 this week. Inversion beats prediction every time. Taxes are your biggest expense. Treat them like war. Taxes ate more of my wealth than crashes. I fought back. Roth conversions in low years. DAFs with appreciated stock. Charitable remainder trusts. Saved hundreds of millions. Example. Donate Berkshire stock basis near zero to DAF. Deduct fair value. No capital gains. Grows tax-free. I knew engineer 56, 280,000 income. Maxed HSA, catch up for a 1K. Backdoor Roth, Munis, tax loss harvesting. Save 68,000 yearly. 1.1 million extra by 70. Engineer B, ignored taxes. Paid 32% on MDs. Have the legacy. Your move. CPA meeting quarterly. Convert in 12 to 22% brackets. Harvest losses December. Old winners intaxable. Starve the IRS. Every dollar saved compounds forever. Health is the ultimate compounder. One hospital bill can erase decades. One nursing home year. 150,000. I walked daily, ate moderately, outlived every health nut who stressed over kale. Strength train, sleep, floss, simple. I knew Victor, 68. Walked 5 miles daily. Ate peanuts, fish, nuts. 1.9 million. Died 96. Left 5.5 million. Brother Vincent, smoked, drank, stressed. Heart attack 64. 1.8 million gone by 72 on care. Died broke. Health compounds faster than money. For $100 monthly plan. Gym. Real food. Blood work. Sleep tracker. OI 20 extra years. Millions preserved. Your move. Strength train 3 times weekly. Walk 10,000 steps. Annual physical. Mediterranean diet. Floss. For 100 on health beats for 100 on junk. Partnerships make or break billions. Choose wisely. Warren and I, 60 years, 0 fights, trust, complementary skills. Passed on thousands of deals. Bad partners, drama, divorce, disaster. I knew a businessman who partnered with a genius salesman. Flashy, charismatic, stole millions. Company bankrupt. Good partners amplify. Bad ones destroy. Your move, audit relationships. Keep rational ones. Cut the rest. Life's too short for dumb people. Give while living but give smart. Gave kids millions early. No fights. Daffs for charity. Tax-free legacy. I knew families torn apart over inheritance. We gave annually. Kids learned responsibility. Charity via DAF. Deduct. No gains tax. Grows forever. Mindset. Generosity now beats probate later. Your move. Open DAF. Contribute appreciated stock yearly. Give 1 to 3% annually. Involve family. Legacy without drama. Write your obituary at 50. Live backward from it. Wrote mine at 52. Rational. Durable. Generous. Aligned everything. Updated every decade. Clarity beats hustling. I knew Richard. Died 70 to no plan. Kids fought. Taxes 40%. Wife impoverished. David. Trust. Letter. Directives. Died 78. Smooth. Family thriving. Your move. Write obituary today. 1 page. What do you want said? Align life to it. Update every 10 years. Endgame clarity is the ultimate mindset. Here's your billionaire assignment. Do it now. 1. List stupidity risks. Eliminate 3. 2. Cut spending to 2.5%. 3. Buy one forever business. 4. Cut one envious influence. 5. Walk 5 miles thinking, what stupid thing am I avoiding today? 6. Roth convert this year. 7. Strength train tomorrow. 8. Call CPA. 9. Give one appreciated share to DAF. 10. Update your letter. I'm 99. Still compounding. Still boring. Still winning. The billionaire mindset. Refuse to be stupid. Long enough for compounding to do the rest. Boring wins. Durability wins. Not being a damn fool wins. Now go live it. I'll be here. Clipping coupons. Laughing at the exciting crowd who'll be broke by 70. That's the mindset. The only one that matters. I didn't get here by being the smartest. I got here by being the least stupid. For the longest time. You can too. Start today. Refuse to lose. Preserve. invert, endure. That's it. That's the billionaire mindset no one is teaching you. Because it's not sexy, but it works every time. Now go make it yours.